different.
What's going on, people? This is your boy Jay Hill, and welcome back to another video of the Chocolate Stocks, where we discuss trading strategy, due diligence, and the overall market in general. So if you're looking for a stock to evaluate, I can help you find a sweet spot. And if this is your first time to the channel, please do me a favor and click that like and subscribe button. I am on a mission for 1,000 subscribers, and each of you that take that action will help me achieve that goal. Last but not least, I am not a financial advisor. This is not financial advice. So please take what I say with a grain of salt. All right, let's get to the video. Now, family, we have been beat up. We have been beat down this week. It has been an absolute bloodbath on just about everybody's portfolio, especially for the ones who are new investors. Now, I kind of want to cater this video to you. I want to cater this video to you who's looking at your portfolio right now and is not seeing one single gain. And it just seemed like it's just everything you worked hard for, everything you put into has just evaporated in front of your face. You don't know what to do about it. You're scared to put any more money to it. You hear people say, buy the dips. And you're like, why should I put any more money into it? I am losing money. Why do this? Why do this? And I want to try to use this video to calm you down a little bit and actually show you what's really going on and understand the big picture, because it is very easy to fall into this emotional trap that we have with our money. Now, don't get me wrong. I get it too. I am not trying to say, oh, well, I just don't watch my portfolio and don't worry about it. Of course, I worry about it. I worry about it. I know you do too. We're all attached. It's all hard-earned money. However, sometimes you just have to take a step back, all right? You have to take a step back and you have to evaluate. And that's why I started this channel, family. I want us to trade with strategy, and that is how we're going to become good at this. So with that being said, if you are looking at your portfolio right now and everything is red and everything is down and you just feeling just beat up, I want you to look at all of your stocks that you're holding. Look at everything that you're holding. And I want you to go one by one through each of those stocks. And I want you to ask yourself, why did I get into this play? One by one. Every last one of them that's in your portfolio. And if you can't remember why you got into that play, or you just followed somebody into that play, or you don't know anything about that company, or you just can't answer that question, then it's a play that either you should not be in or you should either educate yourself about. That is the best advice I can give to you right now in this market. I do have good news for you later on in this video, but right now, I want to talk to you, family, about strategy. We need to reevaluate our strategy. Now, I've learned some lessons during this correction. I just recently got into investing, and the reason why I started this channel is because I want to try to translate what I learned in a way that other people can learn from it too. And with that being said, I am growing through this with you, but I am actually doing the due diligence to understand why things are happening. I'm doing the due diligence to understand the bond yields, which is one of the catalysts of what is happening right now, okay? If you don't know what bond yields are, you should Google that. I'm going to give that a homework assignment. Matter of fact, if you Google that and then drop a comment and let me know what you learned about bond yields and how it affected your stocks, okay? That's your homework assignment, family. But with that being said, let me move on. I want you to do the due diligence on your plays, and if you're not believing in the play, or you discover something about your play that you just don't quite agree with, or you look at the financials and you just wonder, like, oh, I'm not in a good company. Look at their history. Look at their stock history. I want you to look at all of that. I want you to take this time to evaluate your portfolio, family, because this is the time where it makes or break what you're going to do moving forward, okay? From a correction comes a bull run. You want to be in the right positions. And if you're not in the right positions, to benefit from the bull run. Time is running out to repositioning yourself, okay? And this is the opportunity to hit the reset button. For those who didn't get in when COVID hit and everything was down and it was Black Friday all the way for 5 months, we're back at those levels now. This is essentially the reset button. All of you who joined later on through 2020 and early 21, you caught the top of the mountain. You caught the top of that bull run. It's been a pullback. The stock market works like that. It's healthy for the stock market to pull back, to bring in new revenue, okay? That's just how it works. So in this pullback, either you're going to add or reposition yourself in these companies, or you're going to, consider pivoting from plays that are really hurting your portfolio. And one strategy that I learned that I'm going to implement moving forward, that I probably got caught and you probably got caught in a few too, is not to go down with the ship. Do not go down with the ship anymore. From now on, I am implementing a rule. After this recovery comes and this bull market goes, I am implementing a rule that if I get down 10% or more after getting into a play, I am getting out. I'm going to let it bottom. And if I believe in that play, I'll just re-enter that play. What I also learned is that you can write off your losses. Just like you have to pay taxes on your capital gains, you can write off your losses to offset those gains. Okay, I highly suggest looking up some due diligence on that, because family, don't think that this is a casino you just walk away with and don't have to pay. You're gonna have to pay taxes on everything you make. So it's okay to have some losses to offset those taxes that you're gonna have to pay later on. I'm saying that to say, if you're looking at your portfolio and you identify things that you just kind of ran into off of social media, or just because somebody told you to do it, you don't believe in that company, or you know that you got into that play for the wrong reasons, then I want you to consider, if you're not down more than 30% in the play. I know it's gonna sound crazy, but I'm gonna say it anyway. If you're not down more than 30% of the play, so if you're down more than 30%, I suggest just holding on to that bag. But if you're not down more, if you're down 25%, 28%, if you're down 15%, I would consider pivoting. If it's not a company that you believe in. If it's a company that you believe in, and I'm going to show you a company I believe in that got down like that, and what I did was load the boat, okay? But if it's not a company you really believe in, if I were you, I would consider pivoting to either a better play that's down right now, or free up that capital for buying opportunities, okay? Because everything is on sale, and you're probably better off using the money that you already put into the brokerages rather than pulling out new money that you are skeptical to do. I know it's a psychological thing, family, and I'm here to talk to you about it. Okay, I've been rambling a little bit about that. I don't want this video to be too long, because I do want to go over what I see for the vision based on the technical analysis that I've done on the market, and then a lot of individual stocks that I labeled on the thumbnail of this video. Now, we're going to go over a few. We're going to go over a few individual stocks, but what I want to do is talk about the individual market. Is the crash over? That's what everybody want to know. Is the crash over? In my humble opinion, we are coming on the other side of it. I think we are. I think we found a bottom today, and I hope that a lot of you took advantage of it. I took advantage of a few plays that I was able to. I pivoted out of some. A lot of them I ended up bag holding. I'll show you my portfolio. But what I want to start with is a view of the S&P 500. So, for those who don't know, the S&P 500 is pretty much, the makeshift standard of the market. We kind of go as it goes. So as the day went along, the S&P 500 Started, hold on, let me get back. Okay, here we go. We opened around 380, dropped down to 372, and then finished higher. So actually, even though we had a bloodbath throughout the day, we actually finished on a nice little bull run. And then if you look at the RSI and the MACD, you can see the strength of the bull run towards the back 2/3 of the day. So as down as the market has been, there has been a lot of green today, and it's all based on the S&P 500. And as I drew these lines earlier today, it respected my trend line very well, very well. Like, that is great news. That is an absolute sign of recovery. I probably drew this probably 3/4 of the day through. And it respected it for the rest of the day. So that gives me optimism that we're out of the rut. Now, if we want to go back to a weekly chart, this to show you what the S&P's been doing for the whole week. We've been on a vicious downtrend pretty much all week. And then here we go. Now we found a bottom, and we got that V bounce. It's actually a double bottom. Bounce. We're up now. I expect that to be a good recovery sign moving forward for the next weeks into March and then through April. All right. So looking back again, let's zoom out to a month time view. And as you can see, where we're at in the recovery phase of the S&P 500. So this is your market. Just picture this being your market. Okay. We had a correction. We had a bounce, and it is all green coming back up. All right. So feel good. It's okay. This was buying opportunities, family. And so we went through our first correction. So now we know, hey, it's time to keep what they call some dry powder on the side. We're going to have to keep some buying power at all times from now on, because it is going to be a point where it's going to pull back, and we're going to get a chance to get in plays that we wouldn't have normally got into if, the prices were still where they were, i.e. Tesla, right? So let's take a look at Tesla. And if you didn't get into Tesla, your time is running out to get into a play that, you got to get the big dogs. You got to get the big dogs. If Tesla pulls back from $900 to $500, you should definitely get into that play. And Fidelity, you can do fractional shares. Robinhood, you could do fractional shares. Average into this play if you don't have enough to buy a full share. We want to try to own 10 to 50 of these if we can. That's what I am doing. I am averaging in. I'm low on buying power because my money's kind of tied up into other plays in the public portfolio. I do have some Tesla in another portfolio. But I suggest, yes, for 533 for a low, you should definitely get your butt into some Tesla because it has a long way to run back up. So got to get some big dogs. Tesla, Microsoft, Disney, all of these things were, within buy zones where when it comes to the next time a correction is going to happen, those big dogs are going to prop your portfolio up while these other plays go on a roller coaster, okay? Another thing to get your butt into is some Bitcoin. Bitcoin pulled back from that all-time high of $50,000, okay? Average into Bitcoin. It's an article on Yahoo Finance. Matter of fact, I'm just going to go ahead and do it just so y'all can trust me. Okay, JP Morgan says Bitcoin could rally as high as $100,000. A lot of articles. The point is, you can look this up for yourself. I can't find the exact article, but Reuters then wrote about it. Business Insider, NASDAQ. So this is a real thing, family. It's at 40K right now, 49K. Family, if it's gonna be 100K by the end of the year, you need a ticket on that airplane. Okay, you need to get a seat in window seat D. Okay, you need to be on that ride. Average in $50 every check. $50 a check, man. Because if it's going to be $100K by the end of the year, it's going to be $500K in 5 years. Okay, so man, family, like, look. More and more financial institutions and businesses are starting to embrace cryptocurrency. This is a real thing. This blockchain is coming. You need to get on that bus if you're not educated on that. Okay, family? Do your due diligence. Drop me a link in comment in the down below. And if you want me to do a video strictly on cryptocurrency, I'll do that for you. Okay, so let's move on, family. Let's look at some of the weekly performers. One everybody's talking about is Rocket. My view on Rocket, I know a lot of people been talking about the potential short interest, potential for a squeeze, and everything else that's associated with Rocket. It almost looked like to me one of the pump and dumps that we've been, kind of recently seeing in the market that happened with all the cannabis sectors, that happened with some of these other plays. Because if it goes up this fast, I told you, fam, it's coming down just as fast. Go check the last video I did on this when it was first running. I called it. I saw pump and dump all the way. I did do a day trade and kind of cashed in on this run here. Didn't experience this. I left house money to experience this, but my initial investment, no, I got that back out. So I'm riding the rest of this with house money. But it looks like looking at the MACD and RSI, it is not being too oversold, it's not being too overbought, which means that to me, it is finding some good consolidation here, which is good if you're looking to re-enter this trade. So looking at this $25 price line, it looks like Rocket bounced off of that one good time and held. So I'm looking for that going into March 8th to really hold that $25 to $23 range before testing the next level of support, resistance, I should say. Next level of resistance looks about $28 and then $29 after that. So we got a long way to go to get back into these all-time highs, and honestly, I think it's going to be a slow climb back. Now, I don't know enough about Rocket enough. I did ride the momentum. I'm gonna be honest. I just traded with that strategy. Okay, it's running. I got a chance to get in here. I'm gonna jump out here because I know you hold it over that day, it's over with. It's over with. So you have to, if you jump into these breakouts like that, you have to get rid of them the same day. And you can only do it once every 5 days in some of these brokers because, they'll put you on the restricted list if you do that. They'll block you from doing day trades. So you use your day trades in case of emergency. Do not go down with the ship. If it's dropping 20%, 30%, in a day, get out. Get out. Okay? If it's rising 50, 100% in a day, get out before the end of the day. You don't want to be on a falling knife and you don't want to be bag holding, okay? Because both of those things will happen. All right, let's move on because I do want to I know this video was getting long, but I do want to touch on a few things. I just want to show you all of the plays I talked about this week. So Zomedica is another one I talked about. And most of these stocks have followed the S&P 500. And I kind of want to show, that's why I showed you the S&P first, because I want to show you, just like the S&P, bottom out here, and then now it's on a run back up. So Zomedica is that one. And all of the ones that you were looking to enter in that sweet spot that I said in the previous video, you got your gift. You got your gift and then some. So I hope you took advantage. All of those prices came back to you. A company that I believe in, MVIS, Microvision, I load the boat on here. I was in around the $14 range. I did average down as much as I could. I was extremely surprised, and I'm trying to get back to my daily chart real quick. I was extremely surprised that it came all the way down to $10. I mean, today it started at 13 and just aggressively sold off. And when it got here, I did add more to my position. So if you go to my portfolio, I mean, brutal day. I'll just go over this in a minute. But brutal day, I had to put MVIS at the end of the list. I had to put them at the end of the list. That's Tesla. I'm sorry. Tesla is the biggest loser. I bought high. MVIS. Here we go. So it's trading at 12.77 after hours. I am currently sitting with 50 shares at average cost of $14.38. Monday, I will be looking to add some more to my position as some things recover and I pivot for some plays. I'm loading the boat on Microvision. The reason why, if you go back to the chart and we look at a 3-month view, okay, Microvision has a long way to go back up, trading as high as all-time high at $24. That is double what it is today, family. If you got in today and we hit all-time highs, by the end of this year or early next year, you will have doubled whatever you put into it today. So if you put $100 into it today, you make a $200 by the end of the bull run. If you put $1,000 in a day, you make $2,000, okay? You double your money up, if not more, if it's going to retest these all-time highs, which I know it will meet and exceed, okay? I did the due diligence. Go back and check one of the videos where I told you the price targets on MVIS Microvision. Another one I want to point out to you, CCIV. Okay, family, I think we have found a bottom for this recovery. All right. I think we're done. I think this is the wrong star. CCIV. Okay, wrong star. Okay, CCIV. Family, same thing. Look at that. That V bounce, aggressive sell-off. All of tech did the same thing. Aggressive sell-off and a bounce. All right. But the way that this aggressively bounced and actually finished green lets me know, hey, I think we're on to something. Y'all. I think we found a bottom, and I don't think this correction is going to last too much longer. I think these are your Black Friday prices. I think by the end of this month, this will be your last chance to get these prices this low. We might be down a little low next week. Heading into the weekend, it might be some craziness happening with GameStop and AMC, depending on how, all anticipated call options and put options and all these other things I'm going to make another video about happen. But at the end of the day, what I want you to know, family, is brighter days ahead, okay? It's brighter days ahead. So think about the strategy. I told you, okay? If you're down less than 30% in the play and you don't believe in that company or you rushed into it, you can't justify why you are in that play, I would urge you to consider selling and pivoting to a play you believe in, especially a play like Apple, okay? You're not going to get Apple this cheap much longer, okay? Apple closed today actually green at 121, but it came down to 117 a share, okay? Apple was trading, let's go back to the 6 month. Apple was trading as high as 153 on a pop, okay? It's going to come back to that at some point. Family, it is at support now. Right now is still a good zone to buy Apple in. Maybe put a limit order, see if you get it at 119, 118. I don't know what Monday is going to hold, but it was bullish momentum at the end of the day. So I do expect, if it follows the trend of what's been happening a lot of these days in the market, what I've been noticing is aggressive sell-offs in the day. So if you're looking to get into a play low, I would suggest setting a limit order early in the market, as low as you can set it, and then see if it comes to you, and then ride the wave back up for the rest of the day, okay? All right, family. Last but not least, let's talk about AMC and GME. Now, the reason why I want to talk about them is because of what I see developing in these charts, all right? And it is a nasty. Now, I'm looking at a 6-month view. Oh, come on. Why are you going to do this to me while I'm recording chart? Okay, 6-month view. Now, it is a nasty little cup and handle pattern developing on AMC as well as GameStop. Look at that. Look familiar? Looks exactly the same to me. Looks exactly the same to me. And throughout this whole bloody week, it is one stock that emerged king. That is GameStop. GameStop this whole week. Here's Monday, Tuesday, Wednesday, Thursday, Friday. Okay? GameStop has been trending up in a down market. If that doesn't tell you something, I don't know what does, family. What I'm trying to tell you is I think this is not a dead cat. I'm not telling anybody to get into this trade. This GameStop is strictly casino. It is not investing. I am not going to tell anybody to do anything with this stock. But what I want you to know is what I see happening, okay? What I see developing. And everything tells me that everything is there for a squeeze. Now, let's look at the 1-month chart, all right? All right. You see this pop and run up? It reminds me of another point in time where we had a pop and a run up. Okay, I think where we at in a second, we in GameStop 2.0 squeeze. We're here, pop, run up. Okay, it's a pop, and I think we're gonna run up for a little while, and then a wire is gonna get tripped, and then that there it goes, right? But I think this time you got big money involved. You know, that time it was just real FOMO. And to trigger a short squeeze, you're gonna need 3 things to happen. One, you're gonna need big money to get involved, right? You're gonna need big money to get involved and get long positions. You're gonna need the high short interest. Okay, this tells me big money is involved. We already know what's high short interest. The third factor is the FOMO. The FOMO. Once people start pumping into this stock, it's going to take off. It's going to take off. But what I can see is this is a more gradual bleed out. Okay, look at you know the 120-day moving average and the 30-day. The 30-day is staying well above the 120-day. And what I want you to notice something really interesting is look at the MACD. The MACD is consolidating around this price point, which means that this is not going anywhere. In layman's terms, I mean, it means a little bit more than that. But just to break it down for the sake of the length of the video, this ain't going nowhere. This is like forming a new support. And usually, when you got consolidation, what I tell you in other videos, family, you want consolidation because a bump becomes of that. So consolidate, bump. Okay, it's going to happen again. Okay, same thing with AMC. Now, AMC been trading a little different than GameStop. AMC is actually, what I noticed is AMC's been following more of the market in recent days. However, most of what AMC has been doing has been mirroring GameStop. Again, pop, and now we just found a new level. Again, look at the MACD. The MACD, now the RSI says a little oversold, and usually when you get a little oversold territory, you get a little bit of bounce in price action. And so I do expect more of that coming into Monday. But what I do see here on the MACD is consolidation. Now, I do expect a little bit of that to continue into Monday, but I do expect things to get a little more hot on AMC come next week and the weeks beyond. And guys, we have this next 850 line of resistance. If it can break past 850, it's going to run to $9.71 as the next resistance area. And I don't even know if that's a well-respected resistance line. I really don't. So I think if we get about above $9 and with a good green candle, this thing could really run. This thing could really run because it is nothing, no other resistance points that's been established or respected. But we are respecting $8. We are, I mean, look how many times we finished $8. We have not finished below $8, even in a down market. So even though it's been following the trend, it has not hit below $8 on the close. That is crucial. That is crucial. That tells you there is still, that this stock is not a dead cat either. We found a bottom. It is nowhere to go but up, okay? So that's all I got for today, family. I am going to record other videos over the weekend, try to get us prepared for the trading day on Monday. I'm going to upload some more due diligence for plays that I think that might be good buys, opportunities right now in this down market, because you might not get the chance to get these prices ever again. So if you like what you heard, if I helped you in any way, if I calmed you down, if I made you think a little differently about your portfolio, just do me one favor. Please hit that like and subscribe button. Maybe even share the video with somebody else, or drop me a comment. Let me know I'm doing a good or a bad job. I will appreciate just the interaction with you, family. All right, you take care, and I'll see you in the next video. Peace.